Hey guys, this is Zype here for SBUX.com, and today we're going to be talking about some of the best food stocks to be looking at in 2014. Food is a great market to be in stocks. People love to eat, and they're going to eat time and time again. It's one of those markets that, just based on the way the human condition works, you know is going to be around for a while. One of the other great things about the food market is that the moment the economy starts to pick back up, people are out there eating. It's always the first market to come back from a recession. It's one of those feel-good things to sit down and have a meal with your family, know you can pay that bill that's coming at the end, and that things are starting to get back to normal. 2014 is going to be a really strong year for the food industry because the economy is just starting to get back on track. So let's have a quick look at some of the stocks that we really want to be talking about this year. The first one is the Wendy's company, or on NASDAQ, WEN. So Wendy's has been one of my favorite stocks for a long time, and it's up over 50% this year. So it's a great stock that's rapidly rising, even before the economy has started to really pick back up. This is mainly because the new CEO, Emil J. Brocklick, has really undergone a revitalization of Wendy's. It used to be, the joke was that if you're investing into Wendy's, you're really betting on the bread, because the only thing that Wendy's had going for them was they had better bread. The company's been absolutely revitalized under a new brand with new menu items at all their international locations, even right down to this pretzel bacon cheeseburger, which is actually delicious. And if there's anything that the market responds to, it's new and innovative menu items. People love something that's new. Wendy's used to be this dingy 90s fast food joint that people really weren't that interested in going to, but they've decided that they're going to look at really reinventing what it means to be a burger joint, and the market is rapidly responding to this. And as if the 50% rise in price this year wasn't enough to get you going, they also do give a dividend of 5 cents a share out, and that amount is looking to grow in the future. As Wendy's continues to push into new locations and with new items, it should be a really exciting year for Wendy's. There's actually talk that now Wendy's and Burger King are looking to duke it out for the top slot as value and growth in McDonald's really starts to decline. So the other stock to talk about, Starbucks Corporation, or on the NASDAQ SBUX. So Starbucks is a stock that's actually taken quite a bit of a beating in the past few months, ever since they launched their quarterly earnings reports. But that's actually a good thing for you, because that means the stock price is down right before the new year, so you can buy in. It looked like Starbucks was actually losing a lot of money this year, but it isn't the case. It was a lot of strategic spending for Starbucks, as they gave facelifts to a number of their properties around the United States and Canada, opened up new properties in the UK and Germany, and actually developed a new brand of tea stores called Teavana. Their hope is that Teavana ends up being the Starbucks of tea, as tea is becoming a far more on-trend thing in these past few years. The fact that the stock has dipped shouldn't put you off at all. Starbucks is an absolute coffee giant, and it's not going anywhere. If you do want cheap coffee, yeah, you might go to Dunkin' Donuts in the morning, but Starbucks has taken coffee and turned it into a real premium treat. We see a lot of students going there. We see, the house mom looking for her rest and relaxation, checking it out, and every businessman who likes, something a little finer than walking into a sketchy Dunkin' Donuts and being served by a 16-year-old kid, they're in at Starbucks. And that's not a phenomenon that's going to go away. It's one that's only going to continue to grow. So they have had a rough year or two with the economy being the way it is, but that's going to bounce back. And as they continue to expand and they continue to grow this new Teavana brand, they're going to continue to just skyrocket. It's actually a great thing to see that the uneducated investors weren't looking at where this money was going in the rocky quarter, and have gotten out, allowing you to buy in at a much cheaper rate. The next stock we're going to talk about is Danone. This is one that's not talked about too often. It's often glossed over, but this dairy giant is actually a great stock to be in. In Europe, the average consumer eats 60 pounds of yogurt a year, and this is where Danone is really king. They absolutely own the European market, and they're beginning to push into North American and Asian markets. In North America, right now, yogurt consumption is only about 22 pounds a year per person, but that's something that's been rapidly growing as we see new trends. I'm sure everywhere you turn in the supermarket now, you're seeing Greek yogurt. It's really becoming a protein supplement for athletes, and Activa is something that's being gobbled up by every health-conscious house mom to, regulate her digestive tract and lose weight and stuff like that. So these are becoming more and more popular trends right now, and the U.S. market is continuing to rapidly grow. But where Danone gets really interesting is not in the U.S. market, but the Asian market. While the US market is expected to grow 12% this year, the Chinese market is expected to grow at nearly 60% over the next year. Currently, Danone gets 6% of its overall profits from China alone, where it owns only 1% of the market. But they've just secured a partnership with China Menggu Dairy Company Limited, who owns 17% of the Chinese market. This is obviously pre-boom. So their deal is to help them capitalize on this expected yogurt boom. If they scoop up even a few percent of the Chinese market, Danone could do up to $150 million American in profit over the next 6 months. It's also worth noting that not only is there this expected massive rise in global consumption of yogurt, but they also pay a fantastic dividend of 2.5 to 3%. So they're a great long-term hold to have in your portfolio. Speaking of long-term holds, we can't talk about investing in the food market without talking about Nestle. Nestle is a timeless classic. They pay a 3 to 4% dividend on their stocks. They're always showing strong growth, and most importantly, they're stable because of their diversity. Nestle branches out into so many different food products that even in a recession, you can't lose that much on Nestle because they're selling water, because they're selling coffee, because they're selling chocolate. Even if one of the markets gets hit, Nestle's still around. What's really exciting about Nestle is how hard they're pushing into emerging markets. This year they bought out Pfizer's baby formula, which accounted for 85% of their profit in emerging markets, which is absolutely great to see. But they're also rapidly pushing in with their coffee, chocolate, ice cream, and water brands into emerging markets in South America and Asia. And it's expected that over the next 2 years, as they continue to absorb local brands and really push for that shelf space, we're going to see them rapidly grow. Last but not least on this top 5 list for food stocks to invest in 2014 is Tim Hortons. Now, Tim Hortons is a Canadian coffee giant that actually, every time a new Tim Hortons is open, changes traffic patterns. There have been multiple cases where when a Tim Hortons opens, city councils actually have to have construction work done to reroute traffic because Tim Hortons is just such a phenomenon. Now, when we're talking stocks, they do pay a quarterly 0.5% dividend. They're currently expanding rapidly into the States, and year after year they're showing growth and more profitability in Canada. What's really exciting here is Tim Hortons did just buy back $900 million of its shares. Not only is this a show of confidence in their own performance, but this is actually a huge move in them trying to take more control over this U.S. expansion. The U.S. expansion had previously been largely owned by 2 major U.S. hedge funds who were really not cooperating with the corporate Tim Hortons brand, and so this buyback allows them to have more control over the U.S. expansion and hopefully see it continue to fight back against U.S. giants like Starbucks and Dunkin' Donuts. So that's been it for SBUX top 5 food stocks for 2014. In regulation with the SEC, my legal disclaimer, I do currently hold positions in all these stocks. And I think if you're ever reading something and someone's disclaimer says they don't hold any positions or don't plan to act on these positions, why would you listen to them? Come to SBUX, I'll put my money where my mouth is every time and only tell you about stocks that I'm personally ready to buy into. Thanks, guys.